Hi guys, John here, Mr. Forex Fire. So I just want to talk through a couple of things with regards to the stuff on the fire trades, and obviously how you can get in on re-entries as long as the structure still holds, and how you can maximize your profits within the fire trades that I called out. Because yes, I'll call out maybe 1-2 trades a day if that, but this is always about quality over quantity. And so far this month we've had 100% strike rate on these as well. Okay, so towards the end of the month, what I'm going to do is I'm going to obviously do what I always do, and obviously update all the sheets and show you what has been winning and where we could have gotten in on the stage entries. But I'm just going to show you the power of not only having these entries and staged entries. I'm going to take it that one step further and show how, if you get a push back to an entry area, how you can maximize on the retracement to be able to grab more profits. Okay, so I'm just going to share the screen. Just bear with me. Let's get rid of this and let's maximize that. Pull this in. Right, so this was one of the trades that I called just yesterday. Okay, and you can see it's the odd JPY, and from there, just give you a rundown. We've got an entry, which is here. You've got a stage 1, which has been triggered. You've got a stage 2, and you've got a stage 3. Okay, from there, I have started doing the implementation of a 10 pip move, where you can take partial, where you're closing a certain amount of profit off and letting it run. We then have your TP1, a 2, a 3, and then sometimes I go towards a 4, depending on what sort of liquidity is residing underneath. Okay, not always, but you generally do have that there. You can see it's now hit the 40 pip. So if you went for a 1 entry, okay, you've got a 40 pip maneuver. However, you can see from here there's been a stage 2, a stage 1, sorry. So like I say, you've got your 40 pip move there. But then if you add in your rollback from there to there, there's an extra 50 pips. So your 50 and 40 pips has given you a 50 pip move. Okay, now this is where I'm going to knock it up a notch. Okay, as long as your structure holds. Okay, so we've got the high to the low, we've got the flag back into a nice entry area. Okay, as long as these structure holds, you can get in on these on multiple occasions. Okay, so we're just going to highlight a few things on here just to show you. Okay, so as we can see, we come in and we've got a trigger point here. Okay, we come down, we had a 20 pip. Okay, so we've come down, we've triggered into there. So what we've got there is, if we just get this on here. So there's 20 pips. Okay, we've come back in and we've tagged back into a retracement of an entry. Okay, once again, we come down, we hit 20 pips. There's your second one. So you possibly had that retracement, that could have been a combine onto the 40 pips. We've then come back in and we've triggered not once, but twice. Okay, so you've got an entry and a stage 1 entry. We've come down, we've come back up, but then we've come back down. So what you've got there is 20 pip and you've got a 40 pip. Okay, bearing in mind you've come up and you've had an entry here and a stage 1. Okay, so then you've got a 20 pip move plus your 30 pip move, okay, which was down to here. So that's 50 pips there. In fact, we'll not count that up at the moment because we come down to hit the 40. So as we've come down, you've had a stage entry here. You had an entry to 20 pips, an entry to 20 pips, an entry and a stage 1 entry coming back down, not just to the 20 pips, but to the 40 pips, okay? So again, you've got a 40 pip move plus your stage 1, which is 50 pips. So that's 90 pips. That there on the 90 pip move brings your total to 130 pips on this one pair. Okay. Now, personally, my trade myself, okay, I will generally, let's get this mixed further up. I would generally obviously take 1 or 2 trades a day. I don't look at lots of pairs. I just look at something that is going to have a nice structured approach. Again, we've engulfed out of this, and then we're coming back into flag back into this area. Now, take no notice of what's on these black candles. This is just another system that I used to use called Monday's candles. But again, as we come in, you can see we had our entry, 20 pips, just to go through it again. Retracement, entry, 20 pips, okay. We come back in retracement, entry, and stage 1. We've come down, and now we've had a break of structure of this point here, okay. This here is a break of structure. So I would be tempted to where this may get a pull back. Let's get a bit of retracement and do it from here down to here. You could get a retracement back to the 618, which is this here. However, there's a tiny bit of imbalance. Not much. There's a very slither of imbalance here. We may see price retrace back up and then shoot further down to take out this here, okay? Because again, we've got an imbalance area right here as well, where it might come down to attack that. So that's where we are at the moment. Again, it's all about maximizing the call outs or the trades that I do, because I do get a lot of people say they've missed a trade, or they've not been able to get into it. Just because you may have missed one entry does not mean that the trade idea is invalid, okay? As long as we've held structure, this is always going to be valid. And it will always be valid until one of two things, until price either comes up and breaks out of the SL area, or price comes down. And in all honesty, if we break through the 40 pip completely and there's been a closer structure on the candle on that, I would tend to close any sort of other limit orders out, if that makes sense. So again, that's just going over the power, what is the structure of play, okay? So again, just to walk you through this one more time, we have the layout of the structure. We have rollback. It's called a return on investment, rather than putting all your eggs into one basket and risking all that. What you are tend to be getting with this is as long as you're using minimal lot sizes and sort of edging your bets with these entries, okay? Let's see if I can get this over here. That's better. Right, so as long as you're, instead of putting a whole lot size on this one area and risking everything on that 40 pip rollback, chop it down into bits. So you've got a 0. I don't know, let's say a 0.10. So you've got 0.10, a 0.10, a 0.10, a 0.10. So you're basically using half a lot size, okay? But what you're structurally getting is on this risk to reward, it's a 1 to 3.75. If you do the short position from this area here, okay, and they don't always go to these areas, that's giving you a risk to reward of a 1 to 5.36. Again, if the retracement came in and touched into this area, which sometimes we do get into your stage 2, you're now going to get on the full play as a 1 to 8.46. And the big daddy of them all, again, if you come in and get your stage 3 entry area picked off, okay, this is where the big money, and we do hit these from time to time. This is giving you a whopping 1 to 18.36. So again, instead of putting all your eggs into one basket and just going for this 1 to 3.75, do your return on investment, chop down your lot sizes and risk them into a rollback. So you, in essence, you've got, let's have a look. We'll just add these up just off the top of our heads. Let's get the calculator. 18.36, okay, plus an 8.46, plus 5.36, plus 3.75. So that's giving you a total there of 35.93. Yes, you're not going to get that as a whole return on investment, but you're going to get a good percentage of that. Now, that's what you call smart trading, not smart money. It's smart trading, okay? It's all about chopping down the tree into bite-sized chunks and being able to trade this way. I found this way to be very profitable, and it's the way I sort of move forward with my trades. Again, I used to be what they call one of these smart money concept traders. Again, looking outside of the box into the trades that I set, I found that this system here that I'm doing right now is far more profitable than what the smart money way is, because you're just rolling back your risk, chopping down the size. And the best thing about this is, let's say you're not liking the price action on there, okay? Let's say you had go back, sorry, press the wrong thing. Let's say you had an entry, okay, an entry here. You tagged into stage 1, you tagged into stage 2. By the time your price comes from your stage 2 back to that break even, okay? Yes, this one here will be a break even price, but you've got 10 pips plus 20 pips. You've got a 30 pip maneuver, because you've got 20 pips there, okay? As you can see there, you've got around about 20 pips there, plus you've got an extra 10 pips from the stage 1. You've grabbed 30 pips as the prices come back to the break even. You could just get out and sort of not so much cut your losses, but you could break even on the entry point, but you've grabbed your 30 pip on the rollback, if that makes sense. And that's the way I look at my trades now. I don't just put everything on one area, go for a big risk to reward. There's no point in swinging for the fences. This is all about managing your trades the best you can. And again, just to close this out, guys, we had the entry, 20 pips, entry, 20 pips, there's 40, entry, and the stage 1 down to this area here. This alone on this one combined move is giving you a total of 130 pips if you were to manage the trade watching one pair, okay, one setup, and just watching price fluctuate from entry to TP areas or take partials and closing out the trades as you go, okay? Now, this could very well, like I say, come back and retrace back to an entry area. I do believe it's going to come to this imbalance area on the retracement of the 618, and then I think we might see a continuation down to maybe towards a 60 pip profit area, okay? So that's just my thoughts on the way I'm looking at trades, how I maximize my trade ideas, and how I manage my trades, okay? Again, I'll spend maybe 1 or 2 hours each day, first thing in the morning, and on the New York session, I will look at these setups. I will see what works best for me, and then I put them into the group with regards to the fire trade areas, okay? So, like I say, going back on this, just on this one trade alone, you could have very much had from here to what, within 24 hours, you could have had a good 130 pips on here, simply based upon the entry, push, retrace, push, retrace, push, retraced into the 2 rollback areas of the entries in stage 1s. Good return on investment. The eggs are not all in one basket, and you're getting more pips out of it than what you would have done just having it on a one entry area, okay? That's how I look at these trades. That's how I do everything moving forward, and it is a very profitable way of trading. Let's have a look at this, just see if I can get rid of that. Stop the share. So that's it, guys. That's just looking at one trade. That's just looking at one trade that was called yesterday, okay? I hope that makes a little bit of sense. Again, moving forward, if you are putting trades on from the fire trades and you're looking to do anything like this, don't go for these big lot sizes. Break what you are willing to risk down into segments on that rollback. If you are able to watch at the computer, you are then able to manage and monitor the trades. Again, if you can't be at the computer, you can always set areas where you can take partials from your NT4 and close out your trades, okay? Because once it's blue, it's up to you, okay? But this is just deep diving into this one single trade idea where it's going to show you the possibility, as long as that structure holds, on just how you can maximize your chances to grab more out of it. Because price is not always going to go up straight away, and it's not always going to come down. There's going to be consolidation, retracements, and pullbacks, and everything in between, okay? And it's just being able to identify those areas, and the areas that I sort of go with on that is these areas here. I always have a take partial area at the 10 pip area, and so even if we anticipate some sort of pullback, I will look to close some stuff out. Then I'll go on a 20 pip marker, the 40 pip marker, around about the 100 pip marker, and then if I think there's liquidity on the further downside, like on here, we've got an order block here, I would sort of start to look at these sort of areas here to grab a little bit more of a pip count out, okay? So again, I hope that makes sense, guys. Test it moving forward, see what you think. But again, this month alone in July, I said at the beginning of this month, I wanted to be quality over quantity. And so far this month, I've got 100% strike rate on what I've been calling out, which is fantastic. It doesn't always go that way. But as long as you can utilize the trades that are being called out and just being able to think, yes, I don't need to spread myself too thin. I don't need to be looking at London pairs, Asian pairs, and New York pairs. Let's just look at the one session that's at hand. If we get a triggered entry, let's see what we can maximize to our benefit and use that rollback system that I have with the fire trades with the stage entries, and then target your areas down. You're always going to get a retracement, and this is where you can maximize your profits by getting re-entries and then doing the same thing. It's all about rinse and repeat. I hope that makes sense, guys. My name's been John, Mr. Forex Fire. Thank you very much.